The underperformance of the consumer products sector is really a striking feature of the last 15 years because it's such a turnaround that the industry was always a very consistent, reliable return generator, and that has completely disappeared. And, it's not an argument that is lacking empirical evidence that this industry has not done that well. It does tell you that you can sort of reward your shareholder at the expense of the consumer for a while, but not forever.
Hey everyone, welcome back to Looking Outside, where we explore fresh takes on familiar topics. And I know that strategy is a very familiar topic for many of you who are building brand plans and business plans. When a strategy works, you can feel it, and the customer feels the benefit of that. But when a strategy doesn't work, the entire industry may feel the impact of that. So to discuss why it's becoming so much more challenging, I have with me a brilliant strategic advisor and fellow former General Millser, Peter McDonald. Hey, Peter.
Hey, Joe. Great to be with you. Look forward to it.
Yeah, me too. So let's start with a little intro into who you are.
Sure. So my name is Peter McDonald. As Joe said, I worked at General Mills for an awfully long time. Before that, I actually worked in government. I had a first career in government, which was an interesting topic and not for this podcast, but learned a lot doing that. And then I transitioned into brand management at General Mills. But during my time there, I also worked in strategy and M&A. In my last 6 years with the company, I ran global strategy for General Mills. And since then, I have been a consultant, mostly doing strategic planning with small and mid-sized companies. Typical client would be a, emerging CPG company that's gotten to the point where they need a formal strategic plan and a partner to take them through it. And so that's what I've been doing for the last 7 years or so, and it's been great. I love it.
That's McDonald Strategy Partners.
Correct.
That's obviously quite a big change after being at General Mills for such a long time, going and doing it independently and getting exposure to so many different fields and categories and different leadership structures. How are you finding that transition towards that independent consulting?
It certainly, yes, it is a transition. It is definitely less of a transition than going from government to brand management. So, I like variety, and there's plenty of that. I think the biggest difference for me is, as a consultant, you don't really own the outcome. And that, when I graduated from business school, I thought about going into consulting, and I was interviewed by a lot of consulting firms. I could never wrap my head around the idea that you would go into a company, diagnose a problem, tell them what you thought they needed to do, and then leave. I was like, wait, don't you want to go fix it or whatever it is you think needs to happen? So I do miss that part of it, but of course I did a lot of that for 20 plus years in my career, and there's being the old graybeard to come in and say, oh, I've seen this movie 20 times and here's some wisdom for you, and let me take you through a process that's tried and true, and it's going to extract your wisdom, and between the two of us we're going to help you figure it out. There's a lot of reward in that.
Yeah. And I guess the strategic team inside of a business, especially a really big organization like General Mills, almost plays the role of an outsider in many respects. I mean, you have to know the business inside out, obviously, and you're day-to-day engaging with stakeholders, so you own the outcome. But at the same time, you get exposure to so much analysis of changing market conditions, and you have to stay quite objective around what's happening in the industry and in global markets to be able to bring that into a company. So it's probably not a huge step in that regard as well.
Yeah, I think that's right. I think, a good kind of client-consultant relationship is built on the recognition on the part of the consultant that you don't know as much about the company as the client does. You don't, and you never will. But you do know other things that the client doesn't know. And a lot of those are things they can't see from inside their organization, or things that you've seen in other organizations that kind of have parallel lessons. And then the other thing I think that's true of anybody is the closer you are to a problem, the more likely it is that your biases are going to creep into your decision making, and the ability to deliver candor gently is, also an important thing, and that often has a lot of value that clients don't necessarily recognize when they hire you to take you through a process, but they find that you hold the mirror up a little bit and show them some things that they might know or not, or some of them know but they don't all know, and
Do you feel like the modern day strategic function is relegated somewhat to being more appeasing and creating an output that is more comfortable for shareholders?
I think that good strategy creates discomfort. And so good strategic advisors, whether they are in-house or outside, recognize that discomfort and learn to navigate it. And when I say navigate it, I mean bring it forward in a way that it can be heard and acted on. And that's a skill. Not everybody's good at that.
No, and not every business is set up in a way to create the space for that either. Like that kind of
Yeah.
provocation can very quickly get pushed out.
Yeah. I haven't had this experience. I certainly have heard other consultants talk about this where, like, a consulting project that goes bad has certain characteristics to it, and one of them is the sponsor or whoever's hired you isn't actually like in the project. They're just kind of like, okay, you guys can't figure it out, so I'm gonna go and then you're like, okay, well, that doesn't work because the people, who actually are working on the business aren't here to listen, or they're not in a mindset to listen because they haven't, they haven't opted into this. I have always been invited in. Like, there's a recognition that, some help is needed. That's created the conditions where, if you get invited in, it's because people want to hear what you have to say. And even if some of what you have to say creates a little bit of discomfort, you've been invited in part to do that.
And sometimes you're playing the role, I can imagine, of a voice of unity and helping the stakeholders to align to a certain vision of what the company is today and what it could be in the future. I mean, in many cases, organizations can't even answer that question of what is it that we do and who is it that we serve. And so
Mm-hmm.
a lot of that kind of strategic analysis is very much helping them to put a stake in the ground there and then where they should go in the future. So you're like very gently trying to navigate them, I think a little bit of coaxing
Mm-hmm.
to get them to think differently.
Yes, that all of those things are true. Although I think the type of companies that I am usually working with, because often it's their first plan, their first formal plan, you know, they often are actually quite aligned, and they often know what they want to do. They just have not created the space for themselves as a leadership group to recognize it in each other and to take the time to uncover what that is. It's not always the case, and there always are points of disagreement and things that need to be resolved, and we have lots of facilitation techniques that will get them there. In smaller companies, a lot of times it's like it's in somebody's head, or collectively it's in their head, and the exercise is pulling it out of them and making it clear to them as a group. I always say to clients, here's the process that we're going to take you through, and try and give them a sense of outcome. But I always tell them there's this sort of hidden thing that I can't really explain to you, and you won't really know it until we get to the end. But it's going to be such a team building experience that is just like a lucky extra that comes out of a process like that.
And I like that that's the secondary outcome because I think a lot of strategic setting sessions end up being about an internal focus on dynamics in the group and leadership alignment and, yeah, a relationship building. And that's also important. But what's more important, perhaps, and I don't know if you agree, is that the company is really clear on what it wants to deliver. I mean, that's the impetus of a strategy and a strategic
Yes,
setting session, right? Is who do we exist for?
absolutely. And that everybody's clear. on what that
Mm.
is. We don't do this every time, but one of the things that we will often ask teams at the end of a process, we'll do a little survey, a little kind of blind survey, and we'll ask people, how clear is the plan? And then the other question is, how confident are you in the plan? And I usually tell teams I like both scores to be high, but I like the clarity score to be super high. Like
Mm.
I'm looking for, 85 to 90% clarity and, maybe 5 to 10 points less on confidence. Because that
Mm.
tells me, okay, this team is like aligned. They're super clear. They understand everything that we've done. And there's some stretch to what they've set out to do for themselves. Like it's not a slam dunk. The other thing that's true is the deliverable of a plan is always simplistically a written document, right? It's a plan on a page, or it's some kind of narrative, or it's words on a page. Plan is both a noun and a verb. And if you think that what this is a noun that you're going to stick on your wall and then you've done the plan, you're not thinking about it right. You need to think about it as a verb. You need to think about it as something that's active, that you're looking at, that you're adjusting as you need to. And your collective understanding of the words on the page is really the plan. The words on the page are important. It's an important communication device. It's an important shorthand, but it's really the understanding of the people in the room who put those words on the page about exactly what they mean.
There's a level of confidence that can never be overcome either, right? When you're creating that ambition on a piece of paper, because there's an understanding that the market conditions will always change, will they continue to change in this very second? And so there are some things that we have more intel and more confidence on, but there are many things that are outside of our control.
Right.
And so do you think that's an element that feeds into that lower potentially confidence score? And it should, that there is an understanding that you can't be ever fully confident because
Yeah,
things change.
I think that's true. I will say we did do a plan for a team once, and their confidence score was actually higher than their clarity score. They were both very high, like they had a very good clarity score. And what was interesting about that, and I said to them, gee, what's going on here? Because this is not what we usually see. And, did you guys just sandbag your plan while we weren't looking? What was going on? And what was interesting in that case was it was a team that had gone through a lot of externally driven, adversity. Precisely as you say, like just a lot of uncontrollables that had really hit them in the previous couple of years. And they had managed through that. And, it wasn't like they were a rocket ship, but they had really managed through some very difficult adversity. And it was interesting when I cross examined them on their confidence score. They said, this is a hard plan, but we just went through two of the hardest years we've ever been through as a team. They were like, it's not that we're confident that everything on that plan is going to happen. We're just confident in ourselves at this point that we can, that we can sort of absorb whatever it is that's coming at it. And I thought, good for you. That's great. You know.
Yeah, that's quite nice. Maybe they've gone through so many resiliency building tests that they feel like whatever unknown comes at them, yeah, to your point, they can weather it together, which is really important. There is the flip side of that, though, which is false confidence.
Mm-hmm.
And I wonder whether a lot of the declines, the almost reset, you could say, in the CPG landscape that's happening right now over the last, 10, 15 years is a little bit of false confidence that things will continue as they always have, and
Yes,
an over reliance on that.
I might even say denial might be a better word than false confidence. I think there's just yeah, I totally agree. I think, you know, just the assumption that the things that you've done in the past are the things that are going to continue to allow you to be successful is a really bad assumption to have without testing it, without pressure testing. Okay, well, is that really true? Like, what are the things that would make that untrue? And do we see any of those things in the world today that might And I think if you dial back, what is this, 2025, dial back 15 years, 2010, I think that's about when I started in strategy at General Mills. There'd easily been 10 years worth of indicators to say, things that we have been doing are not necessarily the things that are going to continue to allow us to be successful. And, and of course it was, well, it's ongoing, but it was probably a lost decade in CPG as a collective. Now, certain companies have done better than others, but as a group, the performance has certainly underdelivered versus prior periods.
And I guess a lot of people see these major organizations and think they're still major, they're still making billions of dollars. Like Kraft Heinz is still a highly valuable asset, but
Yes.
it's obviously not performing as it has in the past. And I was reading a report that estimated $3.5 trillion loss of unrealized brand value with the merger of Kraft Heinz. The both of those things is that it's the declines that we're starting to see, the bleeding of the industry for not potentially moving in the right direction or moving fast enough or paying attention to the changing landscape, but then also lost opportunity, which I think it maybe is a value that's not often enough assigned towards strategic plans, the act of not doing and lost opportunity.
Yeah, I mean, I do think that, like, to me, that's an interesting thought exercise, but it's also a bit of a counterfactual, right? It's kind of like, okay, I guess if I went in the Wayback Machine and made five different decisions than the ones that I made, what would I be seeing? But I'm always a little suspicious of those kinds of analyses, because
Mm.
it's it truly is counterfactual. I mean, I certainly have my criticisms of Kraft Heinz and 3G and what they did, but what did you say the number was? 2 trillion or something? What,
3.5 trillion.
3.5 trillion of
Mm-hmm.
lost value?
Lost unrealized brand value.
Okay, well,
It's from
I
an
mean, I,
analysis I
I
read
guess I,
yesterday.
I
Yeah.
guess I could get my calculator out and take a swing at that, but I don't know. I'm a bit unimpressed by that line of reasoning. There are so many other
Mm.
places to go with what happened there, and that's an awfully large number.
And I guess that your broader point is that even helpful because we need to be focusing
Yeah,
on
it's kind of,
what
yeah.
we do
I mean,
next.
I do think, um, just back to this idea that, and it's a little bit like it's a little bit of a catchphrase for me at this point, but you've got a plan at this moment, and as soon as you walk out the door, something's different than what you assumed it to be. And I'm more interested, rather than kind of the idea of a retrospective, what if we had done this or what if we had done that kind of thinking in strategic planning. I'm much more interested in the probabilistic what if kind of questions on the front end and really stretching your thinking about just what's going on and what's possible and what would need to be true for X, Y, and Z, and having a little bit of imagination about, you know, what what else you might be doing. Because like you can look back and look at all the mistakes, but of course you can't go back in time and and erase them. They're worth. I mean, they're worth. The mistakes are for sure worth reviewing because they inform. It's a little bit like history doesn't repeat, but it rhymes. Like you want to understand it so they recognize their errors or other things and don't repeat them. But I think good strategy is much more future facing on balance.
Yeah, I couldn't agree with you more. And of course, I
I,
mean,
I suppose yes.
yeah,
Yeah, that was
um,
that was a totally like
like
unrehearsed and unplanned plug for your
plant
discipline.
planted
Yeah,
advocacy of
yeah,
strategic foresight. Yeah, I've been thinking a lot about this, that foresight can be done in and of itself. And, you can go and do a wargaming exercise or a scenario planning exercise, kind of hypothetically almost for the fun of it. But I do think it's so much more powerful when it's paired with strategy, when you can connect it in with the shorter term outcomes that your business needs to generate and use it as like a pressure tester. Very, very much what you said before, that you're looking at the critical uncertainties, you're looking at the factors that you're potentially taking for granted. as a complement to what you're doing. But it does feel like there's less of an appetite for that, maybe because it's misunderstood as being only long term focused and only very, very macro, where it can connect into shorter term. But also maybe just because there is, it feels like a broader focus on the short term right now to,
Mm-hmm.
fix the current present day moment before we focus on the future without kind of, recognizing that the future is coming, whether you're ready for it or not.
Yeah, I think that's very true. I also think in large organizations, certainly large organizations in CPG, strategic planning is really very process oriented. It's regimented. Here are the steps that we're going to take. And it's very financially driven. There is a financial model that kind of drives the process. It usually, for business units, starts with targets that come out of the financial model. And so it is, and it's almost taken as like a fiduciary duty or a governance duty to go through strategic planning. The ones that I've seen in bigger companies are usually lacking in that kind of let's really stretch our thinking and scenario plan, imagine possibilities, and because it's just that's not the origin of the question,
Mm-hmm.
oftentimes.
Mm. Back to the point that you made, which I think is really powerful, that strategy becomes fiduciary, that it focuses too much on the short term financial metrics. I mean, are you finding that this is a problem for strategy and how strategy is structured inside of a company? Or is it an external market problem that we're all facing?
Well, I don't know if it's an either or, to be honest. I think those two things can actually coexist quite nicely as complementary ideas. You know, Strategic plans in big CPG companies are multi-year plans. So they are not, unlike an annual operating plan, they are not built around quarterly delivery, but they are financially grounded, and they usually start with a financial model, a
Mm.
multi-year financial model about how the company is going to create value for shareholders. That's the origin of strategic planning, and so it's very much embedded in that that kind of shareholder as primary stakeholder idea. And that shows up in lots of places. It shows up in short termism in terms of how the business is run annually, but it also shows up in the financial modeling that underpins the multi year strategic plan. Those two things have to sync up. And it's necessary for a big company to sort of do it that way, but it, I think, often does a disservice to the real work that needs to be done. The other thing that I think is true but very difficult to it's very difficult to balance in a big public company is, you've got three stakeholders. You've got the consumer, you've got the shareholder, and you've got employees. And truly, the primary stakeholder, the reason that the business exists, is for the consumer. They're the one who buys the product. Like, if you don't serve them in a way that they're going to continue to be your your consumer, then you don't have a business. And I think for big legacy companies who have these strong market share positions, who have squeezed their costs, and they have great margins, and and they have been so successful for so long, it's easy to forget that the origin of that success is serving the consumer. And so
Mm-hmm.
then, in the short term, and consumers don't abandon you overnight. I mean, at an individual level, they might, but kind of law of large numbers, they're not all going away tomorrow. And so it becomes very easy to let that shareholder voice become louder. And I think, if you look at what happens if you ignore that long enough, is you have, you have underperformance that you can't address without turning around to your shareholders and saying, hey, guess what? We've been listening to you for too long, and we're just going to have to do a reset, which is what happened with General Mills. It's happened with a number of companies recently who, have basically had to say, hey, we're going to have a bad year next year because we're reinvesting in growth that we probably should have been investing in, all along.
I think that a lot of organizations do see the changes in consumer behavior, or they do see the insurgents, coming in and creating these very
Mm-hmm.
quick, innovative, fantastic propositions. But they still don't move, and that's a choice not to move on those because they're wedded to a very scalable model. Because they are so big at that point that trying to even experiment inside of that system and create a niche opportunity is so much harder, and it takes so much more investment to be able to break away and to do that.
Yeah, I was just thinking about this the other day because so I don't know the answer. I have a perspective, and I'll just tell you what I was thinking about, which is okay, so what is going on with these companies that they like you look at these companies and they created this industry.
Mm-hmm.
Like it was an act of creation that
Mm-hmm.
they an act of innovation, of creativity, of imagination, of all of these sort of things that that created the modern CPG company and industry as we know it. And at some point, they kind of stopped creating. They stopped innovating. They stopped doing these things. And it's not easy to see how that happened. They sort of went from innovating to optimizing because the things that he created still had many consumers to go find, and optimizing them for cost and efficiency was a way to grow profit. Okay, so that's sort of what happened. But it's been apparent for probably 25 years that that kind of model of, okay, take our big brands and go get them into as many households as we can kind of reached its limits. Certainly not every category in food or consumer products has 100% household penetration, but many of them have very high household penetration. And you could also see around that time that there were needs in the marketplace that big companies were not meeting, that small companies were innovating around. So it wasn't that there wasn't innovation to be done, they just chose not to do it. And I think you're right, it was choiceful that they said,
Mm.
we're not going to do that because it was too small, too niche. They didn't believe it was going to get big or whatever the explanation was. But that kind of back to my sort of like probabilistic, let's examine our priors, let's like adjust our thinking here. I don't know how long you have to watch that going on before you start to reconsider. And it just doesn't seem like they have, or if they have, they've done it in ways that haven't been very successful. And I would argue probably because they didn't commit to it or think it was important enough, or whatever the reason was. So all of that I can talk myself into, okay, if I'm a CEO of a big CPG company, maybe that all makes sense.
Mm.
And so what's the alternative? Because I can't continue to let these small innovators, take the growth. Maybe I
Mm-hmm.
should go buy some of them, which
Mm-hmm.
is what they've been doing.
Yes.
And maybe I can talk myself into, well, that's a better model. And the essence of that model is I'm just going to outsource my innovation. I've lost the muscle. I can't do it. So I'm going to outsource my innovation and I'm going to go let other people do that. And then I'm going to buy them and bring them in house when they've reached a certain scale that allows, for that to make sense within my, scale model. The problem with that is it has been pretty value destructive of them to do it that way, right? If the reason they're doing it is because they need to continue to deliver shareholder value in the way that they've historically delivered shareholder value, and they think that they can't innovate the way they used to, or, you know, the innovation failure rate is too high, or whatever other reason there might be for not trying to pursue that, the alternative then is, well, we're going to go buy innovators. But when you look at what they've paid and what's happened, you know, it's not a great track record. So I sort of, I don't know. I just keep asking myself, like, okay, when are you going to get back to doing what you did, when you created these different businesses? I was trying to figure out, like, when was the last big CPG food brand created by a big CPG food company? Like, what was that? Um, and I came up with the homegrown ones. I think the two that I remember, one was Lunchables, and the other one was Uncrustables, which is almost $1 billion brand now after 26 or 27 years. But I was hard pressed to find many examples. There have been examples that have been purchased,
Right.
and there have been a very small handful that have been created and scaled to that level, but not many.
Yeah. No, and I mean, I know that you obviously you have a marketing background, so you understand this, but so much of it is that these big organizations have these amazing product brand assets. They just don't market them. Like they choose to keep them small. I'm thinking specifically of and I love the Mars organization and everything that they're doing, but the Nature's Bakery brand, I used to look at that,
Oh,
or some of their heritage chocolate brands, look at that and go, wow, it's like amazing, a great product, niche consumer base, but not necessarily putting any marketing funding behind that to grow those brands, and then acquiring these small startup snacking companies to diversify the portfolio when you have already assets that could potentially play that role for you.
yeah, yeah.
So there's a little bit of that like lack of commitment as well in actually growing the brands that you even have.
Yeah, and it can be hard within a portfolio to sort of say, okay, how much resource do we have to spread around? And I, I have worked on orphan brands, you know, before, and
Mm-hmm.
it can be frustrating. Particularly, I think when you have a really strong consumer idea and you can't get it, funded.
Mm-hmm.
That's a hard thing as a marketer to sort of see that. And it's interesting because I think it always baffled me how much I had to argue and fight the organization to keep a big consumer idea alive long enough to get the business model figured out. And
Mm-hmm.
when I say business model, what I mean is like the financial return model, like the margin
Mm-hmm.
structure and the pricing, and the like something that is both you know compelling to the consumer and compelling to the shareholder. Right?
Mm-hmm.
Those are the like amazing win-win sort of things that you want. And I have had a number of those in my career, and it always amazed me the amount of effort that had to go into keeping a big consumer idea alive long enough to prove out the business model.
Mm-hmm.
Like
Mm-hmm.
if you said to me, here two, you can have the choice between a really like powerful consumer idea that kind of has lousy margins and a bad business model, or I can give you a very mediocre consumer idea that's got super high margins and makes a lot of money. Which one would you choose? Every single time I would choose the big consumer idea, because I can always go optimize the business model. I can always figure out, well, can I take a little bit more pricing? Well, does that really like super expensive ingredient need to be in that thing? Does it have to be a 6 count, or can it be a 5 count? There's so many ways to fix a business model, and there's no way to take a mediocre idea and turn it into a winner. You know, it's
Right.
like, what problem are you really trying to solve, kind of a question. And big organizations they love optimization problems to solve. They love that problem.
or a mediocre product that
Yeah.
sells a lot and makes good money and everyone's comfortable. So why rock the boat? I really like
Right.
that thought experiment as well because I think it challenges us to, again, go back to the consumer and really think about, are we creating those breakthrough ideas? Are we thinking enough about how consumer behavior or maybe consumer needs? So before the behavior where we're starting to see those niche opportunities arise, are we
Yeah.
playing enough in those spaces to be able to really understand how our company is going to last for the next 50 years? I mean, I know you recently wrote about this, that the S&P 500, we're seeing so many declines from those big organizations, food companies on there. There's the Fortune 500 where we see an absolute butchering of food companies that were on those original lists in the 50s and 60s.
The underperformance of the consumer products sector, the relative underperformance of consumer products stock performance, shareholder return performance is really a striking feature of the last 15 years because it's such a turnaround that the industry was always, a very consistent, reliable return generator, and that has completely disappeared. And, every business exists to serve a customer. And when you do that well, your shareholders will do well. And to me, it's not an argument that is lacking empirical evidence that this industry has not done that well. It does tell you that you can sort of reward your shareholder at the expense of the consumer for a while, but not forever.
Do you think that there is a misalignment between the driver of poor performance based on what these business leaders, like the CEOs of these organizations, think and what the market assessment tells us?
Let's say more about that.
So, if, for example, the business leaders running these big brands think that the cause for the declines is actually poor economic conditions and smaller
Oh,
wallets versus maybe the deeper diagnosis that would take place. Do you feel like they know that innovation is stalling, that they're not investing enough in consumer led innovation? Like, do you think that they recognize that?
well, they certainly recognize the underperformance, like very clear. Do they agree with my hypothesis that innovation is at the heart of that problem? I don't know. They don't call me. I'm, it's one man's opinion.
I put
Um,
you on the spot on that one. Sorry.
no, no, it's okay. Um, I, yeah, I don't know, but I do think that you are seeing with some of these companies, the worst of the performers in the sector are rebasing. That they have all give, like, not all of them, but many of them have given pretty bad guidance to to their investors. Like, hey, we're our profits are going to be down double digit next year or whatever it is. I think that is an acknowledgement that something is not working, that they need to reinvest in the business. Do they have the ideas that are going to make that reinvestment worthwhile? I don't know. Are those reinvestments being directed, to innovation versus brand building versus, competitive pricing or whatever else? Their circumstances are all different, and I don't know. But I do think what you're seeing in the, dramatically reduced guidance is a reality check that they're finally saying, okay, you know what, it's not working, and so we got to do a reset here, and I hope they figure it out. I don't think they're in denial now. They may have been for the last few years. I think uh, the the pandemic was a bit of a false positive for many of them.
Mm-hmm. Mm-hmm.
When whether it's a pandemic or the Great Recession or some other major shock, these are companies that do well because people start eating at home more. They can supply the market. They can use their pricing power. Like, they do well in those periods, and many of these companies did well for a a relatively short period of time while that was going on. But I think what we've seen in the last, couple of years anyway is just a return to the norm that's been going on for 25 years. And I should probably describe that norm, what I think that norm is, which basically is small innovators taking share very consistently, pretty much across any category you could think of, and private label, growing at varying rates but fairly steadily. It's kind of like the top and the bottom have been winners for the most part, and the in the middle is not.
I do feel like when people talk about private label, they often don't give enough credit to the brand being the retail brand. I mean, I think that like Marks and Spencer, if you have a look at their products and their branding and the ethos of the organization, everything, consumers are also buying into that a little bit. Like, I don't think that they're just trading off on price at the fixture. So you're seeing, I mean, obviously in food, you're seeing private label growth, but you're also seeing it in like retail media competing with traditional media. These retailers are kind of a part of that new competition that I think you were laying out.
And yes, and very true outside the US. Private label has been stronger pretty consistently outside the US than it is in the US, whether it's Canada or Australia or Western Europe, UK. Different markets with different strengths, but you also have much higher retailer concentration in those markets. The top three in Canada or in Australia or, Western European markets, they control a lot more of the market. I will say though, one thing about this topic that is interesting to me, and we'll see what happens in the US with this. If you look at the value chain in food, and what I mean by that is from the field to the table, which actors collect the largest share of the value creation across that kind of spectrum? It is the branded manufacturer. They get the lion's share of the profits in the industry. And I think the reason that is true is because the relationship that the consumer has is with the brand. I don't particularly care if I'm going to buy my Cheerios at Walmart or Kroger or Safeway if I really want Cheerios. Retailers typically run on pretty thin operating margins. Manufacturers, branded manufacturers, have very high operating margins. This is not a current statistic because I haven't looked at it in a long time, but I did look at it at one point. The retailer with the highest operating profit margin in the industry was Whole Foods.
Makes
2x,
sense.
2x the next highest.
Wow.
And if you think about it, I think that's because the relationship that the consumer has is with Whole Foods. Because they know they want a certain type of product, and Whole Foods curates that assortment for them. And that once they walk in the door, they don't have to worry about it. They don't have to kind of like look through the aisle and figure out which thing has the ingredient deck that they want or which one is organic or whatever. Just once they walk in the door, everything fits what is important to them. And that in many ways is a little bit like the relationship that most consumers have with a brand. And a lot of brands, that would like to have that direct relationship. When they're small, they're in Whole Foods. They don't. They're building it out. The question is, can an average retailer, not a more specialized retailer like a Whole Foods or a Trader Joe's or something like that, but can your average retailer really establish that kind of relationship? And can they do it through their private label? And, I don't know. We'll see. Jury's out on that one.
It feels like they're approaching it as a brand, not just a distribution point. Like
Yes.
they probably have customers who see themselves in the brand. They have probably an archetype, brand DNA that they stick to, and therefore they can command the premiums to bring those types of consumers in. It kind of reminds me of a scaled version of almost the boutique grocery stores, and you have so
Yep.
many of them where you are right now in New York,
Yes.
which I miss terribly. But you go in there and it's just like it's a feeling, it's an
Hmm.
experience. It's not
Yes.
transactional. You want to
Right.
spend time
That's right.
there and not get the hell out. So, how do you replicate that at scale? I think Whole Foods, Marks and Spencer arguably have
Yeah.
managed to do that.
Right. What distinguishes you? What makes you worth that relationship? And with retail, with many retail businesses, it's like location, assortment. It's not emotional. It's not emotional connection. But there are retailers who have done that very successfully. They're much more profitable,
Mm-hmm.
but they don't scale the way a Walmart scales. But they make a very good return.
So it's making me think a little bit about management and leadership style. And
Mm-hmm.
obviously, that's so important inside of these organizations that are trying to fix the business or grow the business. I guess, not to sound like a bit of a hokey trivia question, but I am curious what you think the most important skill is for a modern day leader in a CPG environment like the one that we are in right now.
And you use the word skill,
Yes,
and
intentionally.
yeah, well, I'm just wondering, is it what do you need to be good at, or what kind of characteristics, do you need to have?
Oh,
Yes,
characteristics. Yeah.
you like characteristics for this question better.
But we can go
Okay.
with the other one if you
Well, no,
like.
because to me they're different, right? I mean, a
Hmm.
skill set is like skills are sort of acquired and
Hmm.
often functionally derivative, and characteristics are more, I would call them leadership traits, I
Yes.
guess. I don't know. That's a good question. I mean, I do sort of think that, you know, the right leader in the right circumstances is, an amazing story. And there are many examples of that where, a certain leader in a different set of circumstances would not have, done very well. I don't know, though, in this case, if I think the characteristics are particularly unique. I do think that there's a combination of kind of drive on behalf of the organization combined with personal humility that I think is super valuable for any leader to have. I mean, the best leaders that I have are people who are very humble, they're curious, they're very open, they're interested in learning, they're good listeners, and they're good learners, but they also have a lot of drive, a lot of impatience, just a, you know, need and desire to make things happen. And you have to have that in a big organization. Big organizations are like, just they're like models of entropy. They need a sort of outside force, if you will, to get them to move anywhere or do anything. I think a lot of leaders get rewarded in organizations for just having a bias for action and making shit happen. But sometimes those are not the leaders who necessarily are the most curious and the greatest listeners and the people who actually think through what is it exactly that I want to have happen, you know? And that
Hmm.
combo is, that's a great combo to have. But I don't know, I don't answer that question with great knowledge of CEOs and leaders in CPG right now, or I'm not inside these organizations, and I haven't even been in one of them for a long time. But that would be what I would be looking for, and that, to be honest, is a lot of what I see with a lot of these entrepreneurs who are leading these small companies. Like, very much recognize what they don't know, and they're very hungry to get that learning or to bring in talent that has that knowledge, but they have a really powerful drive to make things happen.
Yeah, they have that action oriented nature. What I love about what you said too is, openness, the learners will inherit the world, that curiosity. All of those things can be taught and nurtured and enhanced inside of great leaders that already have that drive to action.
Mm-hmm.
And it's so critical from moving you from what should happen, which is such a pivotal question to ask for a strategic building to what could happen, which leads you to the other element that you touched on, which is scenario planning and being curious about how the world is changing. That's definitely the one that I would call out as well, is curiosity. I love that one.
Yeah. I think especially when you're operating at a time of fairly high change,
Mm-hmm.
um, that's a really important,
Critical
yeah.
one. Yeah, definitely. This has been, it's been wonderful. I do have one last question for you. Obviously, you're a very curious person, and I love that in your description, your professional description, you say that you're an original thinker. So, to be an original thinker, you need to be looking at different things and gathering inspiration from different perspectives. So, I'm really curious on what your go-to is to look outside.
I don't know I don't know if this is like an intentional sort of behavior where I like intentionally say, I need to start getting some other thoughts or ideas or whatever. But two things that I do that I think help me a lot. One of them I will call my kind of blue collar hobbies. I like to fix stuff and build stuff, and it could be like tuning a car, or it could be fixing a dishwasher, or putting a new fan in my furnace. I mean, I like to do things around the house and just get away from intellectual activities and work with my hands and tools and make stuff or fix things or whatever it is. So that's definitely one. And then the other is I have some artistic pursuits that I think probably similarly get me out of my intellectual brain and into a
Mm.
different space. Photography, which I've been doing for a very long time and I enjoy quite a bit. And more recently, my wife and I have picked up pottery. We go to the pottery studio, and that's been a great hobby, and that is something that is focuses the mind like nothing else for me when I'm trying to like take a lump of clay and turn it into a mug. It just everything melts away and I have no idea what's going on.
There's something to that, right? Where when you're doing intellectual work and your job is to think for a living, actually doing something that switches your brain off and connects
Yeah.
you physically to the world. So I love that.
Yeah, I do think it is helpful to just do something that's completely different and disconnected, and whether it helps in work or not, I feel well rounded because of it. So that's important too.
Yeah, and I'm sure it has helped in your work because your work is fantastic. So thank
Well,
you
thank
so much for coming
yeah.
on the show. It's been a pleasure talking with you, Peter.
That's been great. Thanks, Joe. I really appreciate the invitation, and it was great to chat with you.